All right, we are live on Facebook. Got our America gear. Hello, everyone. We're live for another rendition of Thursday's Top Tips in Real Estate. I guess this edition is 4th of July edition. Since I can't believe it's already July, like what is going on right now? But we go live every Thursday if you guys are popping on for the first time. So with a new topic every week we talk about, so this week's topic is frequently asked questions from buyers. So we have both realtors and lenders on each week, amazing local professionals that share with us their #1 tips and also just give us an insight onto the industry. I mean, my name is Lucie McGuire, Arrow Title Services, in case you didn't know. So we're all like one little piece of the puzzle when it comes to real estate. So we're all here to make sure that you guys are educated in what's going on. So thank you all for being on here every week and being a part of the discussion because it's always a great one. So I am going to go straight into it. Katey is up first. So we're going to start with realtors and then go into lenders. Now we're going to talk about frequently asked questions, again, that buyers usually ask either to realtors or lenders, depending on which side we're talking about. So Katey, take it away.
All right. Well, I'm not going to forget this time to introduce myself. Katey Bourgeois with the Bourgeois Real Estate Group here in Palm City. Thanks again, Lucie, for hosting and having us. So I hope you can see my screen. So frequently asked questions. And since I'm the first up, usually the conversation will start with, how's the market, right? Can I get an agreement there? Thumbs up. How is the market? So I always say, unbelievable. Which portion of the market are we going to discuss, right? Are we talking about the buyer side? Are we talking about the seller side? If we're talking about the buyer side or seller side, what area are we talking about? What specific price range are we talking about? So the market, I would say, is unbelievable. We never know what's going to happen, but we're always surprised when great things happen, like right now. Our current market, just a quick snapshot, we have a little less inventory than we need to keep those prices stable. A balanced market is about 6 months of inventory. In Martin and St. Lucie County, which most of us cover, Martin County is, I believe, at 4.8 as of last month, May 2020. Those are the most recent statistics. Then St. Lucie is even lower with 3.3 months of supply. So we really need to be at 6 months in order for there to be a balanced market for buyers and sellers. So if you know a little bit about economics, if there is low inventory, the prices rise. So that's where we are right now in St. Lucie and in Martin County. And I'm sure I see some nodding heads that there are others that agree with me. So also, in addition to the inventory, the next question is usually interest rates. So I am not a mortgage professional, and we have tons of great mortgage professionals on the call, and they'll probably talk about that. But what I wanted to just express is that, again, I'm sure you're hearing it a lot, historically low interest rates. It is a great time to be a buyer. The money is cheap, meaning that there is very low interest rates on that, the borrowed money to make a purchase on a home. And right now is probably the best time because we know what's happening right now. I think that's pretty much it. I'm going to toss it on over to the next guy. I guess somebody coming through my door.
Awesome. Thanks, Katey. That was great. All righty. So now we're going to go to Codi Fletcher. Go ahead and spotlight your video, sir. And give us your frequently asked questions.
Yeah, my screen here. All right, so this is Codi from Bourgeois team, Bourgeois Real Estate Group, that is. So the most frequent questions that I get asked is basically the process. So it seems simple to us, but to them, you know, we got to kind of break it down. So, you know, we let them know they first need to get pre-qualified. Once we know how much we can spend, we can find them what they're looking for, go through the whole process with, you know, the inspections, the insurance, getting their mortgage, getting them closed, getting them in, making them happy. So we go through that whole process with them. They also ask about credit scores. I usually try to tell people that, you know, they should get with a lender and you know, with somebody that they know they can trust, because those scores have changed since COVID started. You know, FHAs were what, 580 before COVID. Now they're looking for like 610 or something. Conventional loans are like 690. But you know, they will be able to tell them, that the lender will be able to tell them where they need to be, if they need to pay anything off, you know, what their debt to income situation is, and then what they need to do to get to where they need to be. So I would say find a good lender, and they can give you all the information you need. And then there's always, they ask about the valuation of property. So you know, I go through the whole comparative market analysis for them, the RPR reports, the whole shot. So you know, values vary amongst houses, land. So I try to give them as much information as I can that is available to me. So if you have any questions out there, feel free to call me and ask. I'll be more than happy to answer. Did we lose volume?
Yes.
Sorry, that was me. Sorry, wrong. Great job, Codi. That was great. That was great information. So you guys heard it from 2 realtors, and we have 2 other realtors on this call as well, but we're going to kind of go to the lending side now and see what questions we get, or what lenders get for questions. So we're going to start off with Carol, and take it away.
Hey everybody, Carol Dols here with Gateway Mortgage. One of the questions that I get a lot, which really makes no sense, is can I roll in my closing costs into my loan amount? I'm going to say no, that's not an option unless there is an unless there. Unless you're getting a USDA loan. USDA will allow you to finance closing costs, but the house must appraise for the purchase price plus the closing costs. But under normal circumstances, no, you cannot roll your closing costs in. Those are a separate item that you must pay for. One of the other frequently asked questions I get is, can I buy a house with no money down? Well, yeah, if you're a veteran or if you're going USDA. Otherwise, you're going to need to put at least 3% down or 3.5% down, depending on whether you're getting a conventional or FHA loan. But there's a little side note to that. In order to cover those costs, you can get the first-time home buyer down payment assistance. So some of the lenders kind of make it advertise that it's a no money down when technically it's a first and a second mortgage. So that will help you to get that money for that down payment. Another one that I come up with is, can I get a mortgage without a credit score? Well, yes, you can, but it's called manual underwriting. And what that means is the loan officer will take your credit documents and kind of build your credit with a payment history on, you know, like a phone bill or a rental history. And we want to build at least 3 trade lines, but there is an option if you do not have any scores. But I will say this, if you have scores, we're going to use them. We can't just ignore the scores if you have low scores with a manual underwrite. That's not what that's all about. It's for people that actually don't have any credit. We can build non-traditional credit, but it's going to be manual underwriting, and that manual underwriting is not going to be on a conventional loan. So, and not all lenders will lend on manual underwriting. So those are my top 3.
That was some good information right there.
That was really great.
Yay.
Awesome. So next we're going to go to Amanda Foster.
Hey, Amanda Foster with the Sterling Mortgage Group that's part of Element Funding. So thank you, Carol, for not asking any of my questions. I was like, oh my God, she's going to say it now. She's going to say it now. So one of the frequent questions that I always get asked is, why do I have to pay mortgage insurance? And why is there a lump sum fee and also a monthly payment that has to be made? So mortgage insurance is always there for somebody that has less than a 20% deposit to put down on a conventional loan. What I always tell my clients is that the mortgage insurance is there to protect the lender in case the borrower was to default on the loan. And upfront mortgage insurance lump sum payments are only applicable with FHA loans. So if you have a conventional loan, you only have a monthly payment to make. FHA, you have an initial lump sum fee that's added onto the loan and a monthly payment that's made as well. Another question that I get, if they do have mortgage insurance, is how long do I have to pay this for? Is it on my loan forever? So again, another thing that I tell my clients, if it's an FHA loan, then technically, if they keep that FHA loan, they have mortgage insurance for the first 11 years of that loan. If it's a conventional loan, then at any time that there's sufficient equity in the property, the borrower can typically pay for a re-inspection to have the property appraised. And as long as there's sufficient equity there, then the mortgage insurance can be removed. And they are my two top questions that I get. Thank you.
Awesome. Thanks, Amanda. Great information. All right, so now we're going to go to Dana.
Hi, everybody. My name is Dana Mainenti, and I'm with Guaranteed Rate Affinity. I'm a lender. And thank you, Amanda. Thank you, Carol, for not asking my questions. So one thing that I wanted to talk about is buying down points. Is it worth it? And buying down points means that you are paying to lower your interest rate. There are times when we call it pricing. So if your interest rate, and it changes by 1/8%, so it's either 3%, 3.125, 3.25, and so on. Sometimes the difference between each interest rate could be a couple $100s. Sometimes it could be thousands of dollars. The best way that I like to show is to see how much money you're going to be saving each month with that lower interest rate. So if you're going to be saving $10 and it costs you $1,000, then it's going to take so many months to make up that amount of money that you're paying. A lot of times people don't stay in the home for that long. So they say on average, like 5 to 7 years. So if you can make up that money, whatever you're spending to pay that interest rate after, a couple months, if you start, saving money, then it's worth it. If it's going to take you 10 years to make up the amount of money that you're paying to buy down the points, then it's not. So it is always a great question, when you are talking about interest rates with your lender will discuss the current rates before locking. And, if you want to ask that question, if you have some extra money that you're thinking about putting towards your interest rate, definitely ask. Then one other topic that I get asked a lot is, what loan is better, conventional or an FHA? So I think that both loans are good. If you have a credit score in the lower 600s, an FHA is definitely the best route. You will get a better interest rate. Yes, you will have mortgage insurance, but if you were to go conventional, you would have, possibly mortgage insurance, and it would be very expensive. So a conventional loan is great when your credit score is over a certain threshold, because you will get better interest rates and lower cost in mortgage insurance. Every situation is different. A lot of things come into play, like your debt to income ratio. So, I can't give any tips on, it's not like a blanket statement, but it's definitely a question that you should discuss with your lender just to know all of your options. And that's all I have.
That was great. That was awesome. Nice. I'm loving the information that is coming out today. Well, I love it every week, but still. All right, Lisa, that's up to you. So let's spotlight your video and you're up.
Well, nobody's asked these questions, so this is great. I'm Lisa Hemann, and I'm with Home Team Lending and Stewart. And one of the questions that I have gotten for years, and from company to company it varies, but will your company sell my loan after closing? And the answer for me and my company is no, we won't. We're a small direct lender, and we do the servicing post-closing. So for some people, that's really important because they have, have had a bad experience in the past with their lender selling their loan to, to more different companies and not knowing where they're going to send the payment. So it's also important for some people too. Some people don't care, and others, they want to know that their loan's going to stay put. Another question, and to me, this is more of a trifecta of buyer questions, but what's my payment going to be? What's my interest rate? And what are my closing costs? And knowing those three, answers, you can easily explain a 60-page mortgage application. It's important to be very clear and explain the details, the rate, payment, and interest rate. So, they understand completely what they're getting themselves into. The other part of that too is answering those questions up front, explaining the difference between closing costs and prepaids. That's another critical issue, because a lot of the times somebody will ask, what are my closing costs? And they don't even know what the term prepaids are. So the two of those together, for a buyer, they need to know what they're bringing to closing. And if they know that up front, they know exactly what to expect. It's going to save a lot of headache for them. It's going to decrease the amount of calls that their realtor gets and that I get. So the basics are what, those questions are really the basic for me. And yeah, if they know that, then they're in good shape. So
awesome.
Yeah.
Thanks, Lisa. That was great.
You're welcome.
All right, so now we're going to head back to the realtor side of things. So we're going to go to Alannah, and please share with us your top questions.
Hi there, everybody. This is Alannah. I'm with the Dean's List group at EXP. I'm going to just really briefly share my screen here. And so what I wanted to cover, I'm so excited I get to share. Disregard my dogs. I can do nothing about them. The question I had that I was so excited to share was, I get this all the time. Shouldn't I call my agent after I've found the house that I want to buy? What's the right time to get in contact with my agent? And I think it's funny because, so often there's this misconception that real estate professionals are not valuable because they cost money and people want to save a buck. They don't understand that by finding their own home and letting us know at the end of that search, they're cutting out a large portion of what our job actually is. Our job is to identify what's valuable to our buyer. What does our buyer need? What does our buyer want? What is our buyer's budget? And be able to use that market knowledge that we have as a local professional to find good fits for them and be able to streamline that search and cut out so much of the extra stuff out there that might be inventory that's not well suited to them. So coming into, a place of having a conversation with a professional before you've found that perfect house enables them to be able to give you the best experience from start to finish while you're searching and home buying. Tagging along with that, another question I get asked all the time is, who pays the buyer's agent? There's a lot of concern, especially with a first-time home buyer, that if they have to come out with closing costs or they have to come out with a down payment or this or that, they don't want to also pay an agent. So it's usually a surprise to somebody who's buying for the first time that a seller actually pays a buyer's agent. The only thing a buyer would end up paying is oftentimes, depending on the brokerage of that agent that's representing them, there might be a transaction fee. It doesn't go into an agent's pocket, but you're not paying for that agent's services. So having that relationship is really just 100% benefit to you, the buyer. So I get that all the time, and it surprises me that that's not better known. The third question that I had to kind of go hand in hand with that line of questioning is, there's often confusion between down payment and closing costs. And the terms are thrown around all the time where you get, no money down, you have your closing costs covered, and people get the impression that they don't have to put any money down towards a home because they think that one is covered and they think that closing costs and a down payment are the same thing. So what I like to tell my clients is, off the bat, really separate those two terms in their minds. A down payment is your commitment with the lender who's financing you. This is what you are putting in off the top so that they will take you on and support you and, finance the rest of your loan. And your closing costs are all of the state fees, the title fees, all of the processing that goes along with that to make sure that everything is lined up for you to take over that home ownership properly. So once you separate them in their minds, it's a lot easier to digest. So those are the frequently asked questions that I prepared for today, just to bring a little clarity to that home buying process. So I'm going to stop my share now and give it back to you, Luz.
Awesome. That was great. No, and I'm glad that you mentioned the buying and selling side, like where the money is actually coming from, because that is a misconception that a lot of people don't know of. So thank you for mentioning that. All right, Peter, you are, wait, where did he go? Oh, he must have dropped off. He might come back on, but so I am going to actually open up the floor to see if there's any questions that maybe as a realtor you get questions that should be directed to the lending side, like common questions that you get from that, or if you're on the lending side, common questions that you get as a lender that should be directed to the realtor. So as you guys kind of mull on that, I am going to bring up one of the most common questions that we get as a title insurance agency, or it might be directed towards you guys, but it's something that is where our part is. So a lot of people ask, like, why am I paying for title insurance? So title insurance is a very key part of the whole process. It's actually the one thing that protects you from your, okay, let me back up. It's the one thing that protects you from your ownership of that home and that land and property. So it protects you from anything that has happened in the past, where most insurances protect you from anything that's happened, that's going to happen in the future. So land's been around for forever. There can be liens and judgments. There's so many things that can go wrong with when you're passing title over every single time the house is sold. So there's so many different moving parts to it that sometimes things get left out. So it's our job to go back and make sure that when transferring that title in the process of selling a home, that the buyer is then getting a free and clear title on that property so that they're not going to run into issues that could happen in the future that could come up and cost them money. And if there are issues that come up in the future, that title insurance is what you would bring in on. If like, oh, there's an issue that wasn't found, okay, you would then make a claim to your title insurance and they would pay for it. So that's what's protecting you there. And the one thing that I found so interesting when I started into title insurance and everything was that it's a one-time fee for as long as you own the home. So if you are planning to stay there for a long time, I mean, if you're there for 10, 20 years, you're paying a one-time fee rather than most insurances where you're paying monthly. You know, so I think that those are very valuable concepts to understand when you're purchasing title insurance. It's the thing that's protecting you. And there's two policies, lender's policy and owner's policy. Lender's policy protects the lender because the lender is going to require you to have a lender's policy because they don't want to be screwed. And why would you not protect yourself in that same instance with the owner's policy? Because you also don't want to be in a situation where you have to shovel out money. So I see that Peter joined us back, so I'm going to put the floor to him with his questions. And I'm spotlighting you now, Peter.
Sorry about that, guys. I had some technical difficulties, but these are some of the frequently asked questions that I get, and I'm just going to share my screen really quick. Can you hear me?
We can.
All right, awesome. 1 second. So, like I said, my name is Peter Negron. I'm with Keller Williams, the Hunt Group powered by Keller Williams. And some of the most frequently asked questions that I get are as follows. With the new home buyers, does the price include the land? Now, that really depends. It depends on what builder you're using and what community that you're in. Now, we can go case by case basis, but usually more than likely the price does not include the land. So keep that in mind. Next question is how does it take to build a new home versus purchasing a resale home right now? And that's a good question also. And it really varies also by the builder, because sometimes a new home builder will have a couple of spec homes that are already built. Now, it's not going to have everything that you want in it, or maybe it will, but we have to at least go out there and see what they have right now for supply. That way we can make those decisions.
No. I think he got frozen.
Can we all just take a moment though and appreciate how nicely he put this together?
Yes.
Yeah. No, it's awesome.
Beautiful.
Look at that. It's visual aid.
Yeah.
Well,
Right,
well,
gets your attention, that's for
He's
sure.
back.
all right. Let's
No?
see. Nope, he's not back. All right. Well, let's look at the, do we want to look at the questions that he has on here? Is there anyone else who can chime in on them? If he's not going to be back?
Yeah, I mean, of course. The you know, the taxes in the area, and you know, will the seller pay closing costs? Those are things. Oh, hey, it went away.
No, he went away because he went away, but you go ahead.
Those are things that, you know, definitely impact your end price, and sometimes it is different between a new build and a resale, and it really comes down to not only trusting the professional who's representing you, because they know what your needs are and their job is to guide you to the right end game, but it's also your responsibility to do your due diligence and ask questions to either the lender that is offering these extra perks to make a new build desirable, or to the lender who's representing you for a resale, because they're ultimately going to be able to give you the best way to restructure your price points. Like, for example, if your home under appraised and you've already maxed out your concessions, you're in a position with a resale in particular, in this case, where there are other places to perhaps siphon that money from or negotiate in a different direction, whether that be, you know, a lender credit, whether that be some sort of outside deal, you know, whether that be a restructuring of prior negotiations. There are options and opportunities to make a deal work beyond that point.
Nice. Does anybody else have anything to chime in from what we saw on Peter's screen, or no?
Or something else.
Thank you, Alannah. So as I was saying before, I do want to go into like questions that realtors get that should be directed towards the lending side or vice versa. So does anybody want to take the floor with that? Dana?
Okay, Dana Mainenti, Guaranteed Rate Affinity. Some of the questions that I receive are related to repairs and negotiating maybe a cost of a repair, or whether something should be fixed. Sometimes it is related to the appraisal, which is a lender topic. So I can make suggestions on maybe what an appraiser might know, but it's just so hard. You know, a lot of times they would say an FHA appraiser is more strict than a conventional, and then VA is the worst of them all. But they pretty much are all streamlined. If you're going to have mold in a house, it's going to be an issue for all three loan products. So the best thing to do, I would say, is to fix as much as possible before the appraisal comes in, so we can be proactive. But you know, the realtor is the one that's there, and the realtor, you know, kind of knows, you know, I'm never in the house, you know, I just know what the report comes back and looks like. So, you know, I really do refer to my realtors on that.
So does a realtor on here have an answer for that then? That's kind of, I figured that's a question that should be directed at the realtor. So do we have an answer for that? For the question that, Katie, or no? Oh, Alannah, you're muted.
Sorry, folks. So Dana, simplify that question for us so we can make sure our viewers understand exactly what we're answering.
So let's say the inspection comes back and there's a list of items that are on the inspection, and they are debating on whether to get money based on those results or to fix it before the appraisal.
Okay. So this is a scenario where the house is, you know, the subjective, it's the subjective thing in this equation, right? So it's a matter also of the comfortability level of the buyer. Is the buyer handy? Is the buyer part of a trade that might be able to address that problem possibly cheaper? You know, is there something where, say, you have a roof issue and you also have a plumbing issue? Is your buyer capable of taking those things on, you know, and has a contractor that they trust to do that job? Do they trust that a seller is going to give them the best job that they need instead of a patch job? You know, if it's a small thing, I personally, as a buyer, would prefer to take it on myself, because a caulk job on a window is a very easy thing to do and a very easy thing to mess up. And if you don't actually care about it coming out right in the end, do you want somebody with that attitude taking on something that could be preventative maintenance that ends up becoming a problem just because you didn't, you know, you wanted to feel like you got something out of that negotiation? Oftentimes a realtor is the one who's doing a little bit of that ego check, because a buyer, you know, especially in this market, right, you're in a multiple offer situation. You very probably offered more than you initially wanted just to get the deal under contract. So here you are. You're emotionally invested. You don't want to let it go, but at the same time, you feel like you've given everything and you've gotten nothing. And, you know, it's our job as the realtor to go, is this something small enough to take care of after the fact? Or is this something large that perhaps will become an issue for insurance? Perhaps it'll make it impossible to get it financed in the end, at which point I would, you know, work in co-op with my insurance agent that I trust, or the lender who's working with that same client. Like, there's a lot of things to factor in there, and it's my job to assess that case by case, because to Dana's point, I have been in the property too. I was very probably representing the buyer during that inspection when they were probably working to pay for the home. So I can go, you know what, that was actually just a matter of, it just needs a little WD-40. Whereas, you know, that was a big issue and they were hemming and hawing over that. So I think that that's important and we should go after that. So it really is subjective, but thank you, Dana. It gives, you know, our buyers an opportunity to really rely on us to guide them.
Mm-hmm.
That was an awesome answer, Alannah. Go ahead, Katey.
I do have something to add specific to not optional. Oh, sorry, my phone's ringing. Hello, when the phone rings. Woo! Contrast to what Alannah is saying, something that would probably be required to be fixed because it maybe was identified during the home inspection and unfortunately wasn't taken care of. And now we have the appraiser coming in and noticing that there's wood rot, or they've noticed that there's an electrical panel that is known to not be able to be insured, and that issue hasn't been cleared up yet. So there are a set standard of things that we need to be looking for depending on the future for that loan. If it's going to be a conventional, the buyer can accept the property in its current condition and not have required repairs for, you know, as a result of the inspection. And FHA and VA, like you mentioned, they have, because they're government-backed loans, as we know, there's going to be more scrutiny on that condition to protect the veteran and to protect the lender, that government-backed lender like FHA. So they want the house to be in the best condition it can be on certain criteria. And one of those is, you know, health and safety. And, you know, there's a little list of things that an inspector coming in, they're going to ask, if they know what they're doing, they're going to ask what kind of loan that we're dealing with to make sure that we're elevating those issues that need to be taken care of immediately so that we can get through the loan process smoothly. And the loan process, meaning specifically the next step, the appraiser coming in and identifying those as issues for the bank, essentially.
I'm so glad you said that, Katey. Absolutely.
Great job.
Awesome. Does anybody else have anything to add?
I'll say one thing, just tagging off Alannah and Katey. I think it all comes down to communicating with, you know, as a lender with the referral source, in this case being a realtor, going into the transaction. Again, what kind of loan is it? Just at first glance, before even presenting an offer or even after being accepted, are there any possible issues that could come up? Like, is there a stain on the bathroom ceiling that is an old leak from before the roof was replaced? Or is that something that's new that we have to get out in front of because that's going to come up in the appraisal or, you know, in the inspection? And both of them, actually. So as long as we're talking and looking at all possible outcomes and again, determining upfront, is this yeah, we need a contractor to come in and look at this, or is this, no, we can get the seller to, put some putty in for the, dry rot on the bottom of the garage door. I mean, there's all kinds of scenarios, but getting out in front of it and dealing with it right at the beginning it's critical. And it can change the transaction dramatically. And at the end of the day, the borrower knows that, they're in good hands with all the people that are part of the transaction.
Absolutely. Honesty. Don't try to hide anything.
Right.
Don't ever try to hide anything.
Right.
Cody, did you have something to add?
Yeah, I mean, they pretty much hit it all, but I mean, that's, where your negotiation skills come in, because it just depends on what the situation is. Is it acceptable to all the parties involved, or is it not? So it's going to be up to you as a realtor to navigate and make it work. So.
Absolutely. So I want to bring up the question, what if something doesn't appraise? Like, what if a house isn't appraised? So who wants to tackle that one?
I actually had one that didn't appraise for $250 low.
Oh, wow.
And
wait, what?
Yeah, it came in $250 low. And
Who was that appraiser? Good Lord.
I don't even want to go into it because it's ridiculous.
$250 low.
And $250.
I'll give you $250.
Well, and there was no reason for it.
That's just somebody in a bad mood.
There was no reason. And this particular appraiser, this is the way this person is. I'm not going to say whether it's a woman or a man. Everyone needs to understand, that it is not my fault. It's not the lender's fault. We have absolutely no control. Yeah, we used to back in the day, but we don't anymore. And it reflects on us when this happens. And trust me, we're fighting for your deal to make it work. And I fought for that $250 and I didn't get anywhere. And I was really upset because I'm like, are you kidding me? Because sometimes these appraisers, they hold themselves up in this other world out there these days. And it didn't used to be that way, but it is. So we have to just, okay, let's just move on. But when this does happen, it does affect more than just the loan to value and the down payment, because we lend on the lesser of the two, lesser of the appraised value or the lesser of the sales price. So now they got to put up $250 more plus the difference in the loan to value. So that little amount, I have, we as lenders have to make all the changes. I tried to avoid that. It didn't happen. But then sometimes you get them where they come in like $10,000, $15,000 low. That could be a deal breaker right there. In this case, it was not a deal breaker. FHA loans, they have to appraise. If they don't appraise, all bets are off. You renegotiate or you move on. Same with VA. But that's a good question because it comes up a lot, especially in today's market where we're watching the values kind of spike up rapidly. That's when you start seeing low appraisals because the appraisals aren't keeping up with the market. There's a little bit of a lag time there. And as long as I've been doing this business 30 something plus years, this is always, it's a trend that comes and goes and comes and goes because the markets change up and down throughout the years, but it is something that happens. And especially if somebody's putting down 3% to buy a home, it's going to affect the deal. If they're putting down 50%, it probably won't even, it's a moot point. So that's my 2 cents on low values.
That was great. Thank you, Carol.
$250. And if my realtor's watching right now, he knows what I'm talking about.
Yeah. Yeah, no, it's, and then sometimes with those appraisals, if it's like a new community, or a new house, it's like there's nothing in that area that compares. It can be hard too, because then they're pulling from places that are miles away from that. Yeah, it's insane. So it's definitely something you have to be on top of in the whole process. And yeah, I liked your answer, Carol, and it definitely doesn't come back on any of the parties involved, like title, lending, realtor at all. So we just have to fight our way through it.
We're not allowed to talk to them at all. Like,
yeah.
I can't, I don't want to lose my job for $50. So
Yeah. Well,
Absolutely.
and you know what? It's an opportunity though for agents to really shine because we're in the business of managing expectations. We are also in the business of, like I said before, that ego check a little bit. So when you're in a position where you're representing a seller whose appraisal came in low by several $1,000s, and you know, based on their time frame, their desire to move, what other working clock bits are in play, you have the ability to show data supporting that and be able to, measure out that expectation where, this person, they didn't accept any concessions because they wanted to get this deal. We got up to this point and they've been very giving up until now. We're at a place where this deal is going to bust if we don't move, and we haven't given them any cash to be wiggling with at this point. So it now comes down to how bad do we want to move? How bad do we want to move the needle and move on? And based on their needs, that might not be a good fit, and you might be right back on the market. But oftentimes they've already got a sale going on another property. They have several other next steps in place. And so that managing of that expectation while still being respectful of what they perceive their value of their home is our sweet spot to really be able to shine and bring a deal to closing.
Very nice, very nice. So Antonella, who's usually on these calls, had some questions she wanted to throw out there. So I'm going to ask them for her. Do I have to make sure who is on the deed of a house / parcel, and how can that be addressed on a sale agreement? Does anybody want to?
Is the question related to who owns the property by public deed?
Yes.
Okay.
I believe, yeah. Who is on the deed of a house and parcel, and how can that be addressed on a sale agreement?
So I think the question, or I think the answer might be that when a realtor is writing an offer on a property, we are looking at the public record documents. We're smart realtors will pull the deed, the most recent deed. We're going to pull that tax bill because we want to see what's on the tax bill anyway, and inform the buyer if there are any special assessments as well that haven't been maybe disclosed. And to go a little further, we'll go to the property appraiser's website to make sure that we've got all the information and it all makes sense. And we're going to use that information for the legal description as well. So we're doing triple the amount of work behind the scenes that buyers have no clue about. At least in our office, the way we do things, we are very thorough, and we use all of the resources available to make sure that we get the job done right the first time.
Absolutely. And when
That's
you,
what she said.
find, like I'm dealing with a client right now who's, they had me look up their current state, and it turns out their name was messed up in the actual source where we as professionals gather our data, which is something where we can immediately disclose to them and enable them to fix it. And or, we can make the agent aware that, this is the person that you're having me write this offer to, but this isn't reflecting the same thing on the deed. Sometimes there is a conflict, and at that point, it's our job to recognize it, see it off the top, because we need to fix it.
Very nice. And then she actually had another question that goes towards the lending side of things. Does she have to does a buyer have to disclose if they are on the title for a house they do not necessarily pay taxes or insurance for? So lending side, go Dana.
Yes, please.
Makes it so much easier.
Oh, it's so much easier. And we've said this on the call before, we will find out everything.
Yeah.
There is a scan that the processors do after your application submitted, and it is the search of all of the properties that have your name linked to it. So whether it's in Florida, in Texas, anywhere, we will find it. So it's better to address that property. We could talk through it. We could speak through it at the pre-approval so that it won't change any of the figures going forward once you're under contract. So yes, please.
Awesome.
I will follow up on that.
Go ahead.
Those fraud guard reports will pull previous foreclosures that may not be on the credit report. So when this happens, it could be a deal breaker.
Mhm.
It's not anyone's fault but the borrowers for not disclosing it, because there is a every application that says, do you have a foreclosure in the last 7 years? If they answer no, and we find it in the fraud guard, it's not on the credit report. It doesn't matter that it's not on the credit report. It matters that it really happened. And I have people tell me, but that wasn't, I didn't know, or they'll give you all kinds of excuses. But once we know it's there, we pull the paperwork and we have it. It's there. It's legitimate. It can be a deal breaker. So if the customer would just be honest and fill out the application, 90% of our applications, I would say, maybe even more right now, they're all online. The question, they're sitting in front of the computer and answering those questions, and you're not going to get away with it. That's all I got to say, because it will come out one way or the other. And unfortunately, those things do happen. But when they do happen, we will tell you right away, time out, we got a problem. Sometimes you can overcome it. Sometimes you can't.
Mhm.
It's just like those inspections. If you try and hide something, the inspector is going to find it.
Yeah, it's always going to come back and bite you. Always.
Yes.
Oh yeah.
Disclose.
Yes.
Well, and oftentimes I think buyers, particularly ones who, work for cash, right? I was in the serving industry for years and years. I've served and sold houses for several. I had one particular instance where I was working with someone who didn't disclose. And it was not one thing they didn't disclose. It was a couple of things as a rolling stone that they didn't disclose throughout the process. And we have a fiduciary responsibility, and so do the lenders that we partner with. So I implore, future buyers out there who think that, fudging the numbers or getting a document signed by somebody corroborating something that is in fact not the truth, it will not only be discovered, but when you have a situation where somebody, if a problem's legitimate and you go, oh my gosh, I didn't understand what that question was, let me correct it, get you the data, here, we're closed. You've maintained that trust with the professionals that are representing you. When you blow that trust repeatedly and put us in a position where we are expected to shut down all operations, close out working with you, and politely refer you elsewhere to protect ourselves, that's a risk you run when you're not upfront with us. And imagine getting to almost the finish line and having to start over because you've lost the trust of the professionals representing you and they decide to let you go.
I think after all the years of doing this, you can pick up pretty quickly on somebody being evasive. And I've learned to really ask pointed questions, follow-up questions. For example, if somebody says, yeah, I've got about $10,000 in cash, great.
Cash.
Does cash mean cash in the checking account, or does that mean under your mattress? And the two are very different. And that's just a very small example, but the way people respond, it's very telling, and there's just a pattern. And again, it comes back to the last time I spoke about communication. And tell me everything, because that's the only way that I'm going to be able to truly help you get to the finish line. Don't leave anything out. If it seems like something I don't need to know, I probably need to know it. And yeah, that's what I've been hearing from everybody. Disclose.
I have a question for the lenders on this call that I think buyers everywhere will like to know the answer to. To that point, Lisa, people who store their cash outside of a bank, tell us why that is not a great route when you want to go about purchasing a home.
When you have cash in a safe at home, all around the house, whatever, we can't source that money. So there are some people that come from the school of thought, I want my money. I don't want it in the bank. I want to keep it. I understand that. But, we have to work around that. And ideally, somebody's got to have a checking account and season their funds. I mean, sure, there's other ways, to, get a gift from somebody, etc. But they can't just take cash and use it for their mortgage. It's got to be in a bank account. It's got to be seasoned for, at least 2 months.
Oh, okay.
One
Yeah,
thing
you
I'll
just answered my
say-
question there.
Yeah, I had recently with a client of mine, they actually had a sum of cash that they put to one side at home because they didn't want it in their account where they'd spent it, where they would spend it. So they'd withdrawn it and kept it. Now we could overcome that because we could go back and trace every single withdrawal and match it up. And then that way we could do it because they deposited the funds back into their account and we had a trail of the withdrawals. But the likelihood of that happening is very slim.
There are exceptions like that.
And
there's
that was an
even,
exception.
There's even real quick, I just had somebody, I haven't dealt with this in a while, but a particular cultural community does, the equivalent of a group lottery setup where, every month or so they put their money together every week and then somebody wins and they get their earnings. And that's cash. So, with FHA, you can, that's an acceptable source of a down payment. You just have to be able to trail it that, that week your number came up in that group and you can actually use that as a down payment. But, like Amanda said, there are exceptions, but generally speaking, cash is not king when it comes to getting a loan.
Go ahead, Dana.
So as far as cash goes, I would just say, just go by 2 main thoughts. Can you prove the source? And is it provable income where you're claiming it on your taxes? So we want to know the source of it. Money laundering is a real thing. It's a very, very touchy subject that we are all, we have heightened awareness of. So if you're thinking about cash, that's fine. If you can prove it and you can describe the source. Where did it come from?
So I guess a smart way to get around that is if you're uncomfortable with your money being in the bank, like let's say you get a paycheck, right? And you put your paycheck, you deposit it into the bank, and then you take some out, and then you keep that money aside. Like that could be tracked back from what you said, Amanda, right? So like that would be a way to make it more trackable if you're keeping that in mind.
Yes.
Yeah, it's extra steps.
Always cash. Yeah. Tip income is always cash, but it's got to make sense with the pay stubs and the W-2s because it's not on the pay stubs and the W-2s.
Yeah.
But if you're talking, $10,000, you're talking.
Yeah. Yeah.
That's a lot of nights of serving.
Yeah.
I had one really big table.
Yeah, if you're not paying taxes on it, you probably can't use it to buy a home.
That's correct.
Same with the income.
Yes.
Well, that was a really great conversation. I think that we covered a lot of frequently asked questions. Now, this is Thursday's Top Tips in Real Estate. And if you guys are watching this for the first time, we always have a section where we go to each person and they say their #1 top tip of the week. So we will, Amanda, do you want to start with that? Start us off with your top tip?
Sure. Yeah, I'm just checking that I'm unmuted. Top tip. I don't know if I've used this one before, but it's only because it's happened to me again this week. Please, once the loan application has started and you have been approved, that does not mean you can go and take a new credit card and go start buying things for your new home. Don't do it.
Wait.
Yeah, sweet.
Awesome. Thanks, Amanda. That was a good one.
You're
what
welcome.
About you, Cody?
I would have to say, be honest. That has been an issue that has been haunting me this week. It's like, do you have this liquid? Yes? Okay, well, now it's time to spend it. Oh, well, I got this next week. Well, that's not going to work. Like you told me you had it. Like, so just, we know what you need. We know what's required. So if we're asking, just, be honest. So
Like that. Good one, Cody. What about you, Alannah?
you know what? This week's top tip is gonna take a different spin. By the way, Alannah, the Dean's List Group, EXP. My top tip for this week is, if you expect an expedited service from your professionals, be prepared to get them signatures when they ask for them. Be prepared to find documentation when they need it and get it back to them. I know we want our loan finished. We want our paperwork done yesterday. We want our signatures wrapped up. We don't want to sign something else again. But the fact is, things change and extra documentation is often needed. And again, it's a matter of managing expectations. But if you want it done quickly, get it back to us quickly. And we will mirror however diligent you are getting us the paperwork. That is how we will serve you. I promise you that.
Love it. Love it. Carol?
My top tip this week, if something changes in your employment during the loan process, especially with COVID going on right now, and you get a cut in pay, let your lender know right away. If you get laid off, all bets are off. Just COVID's changing a lot of things right now. So they might have qualified, and then if they get a 10% cut in pay, they might no longer qualify. It will come out in the wash. So keep everybody posted if something changes on your employment.
Good one. What about you, Lisa?
Well, mine is very similar to Carol's. And unfortunately, this comes from a place of experience, but don't quit your job before you close. Just because we have an approval and we are 2 or 3 days outside of closing, that doesn't mean that you can move on to your next thing, because we do verify employment verbally shortly before closing. And yes, that happened to me not too long ago. Yes, they were advised to. It would seem to be such an obvious thing, but not to this gentleman. So yeah, don't quit your job. Do whatever you want afterwards.
Don't quit your day job.
Yes, don't quit your day job. But don't get arrested too and go dark for a few days. And I have to look you up on the internet and see your mugshot. Don't do that either. Same guy, by the way.
Nitty gritty here.
It was the same client too.
I have an episode called Tall Tales.
Tall tales of real estate.
Yes.
I'm sure we all got some good stories. Katey, do you want to lead us into your tip of the week?
My tip is probably consistent with the tips that I've given every other week, I think. Work with a local expert. Find one good local expert who has a team of excellent professionals who work in the market where you're buying or selling, and provide loans in that market. Going to a national website is not necessarily going to get you the local result that would be the best option. So I would just continue to ask everyone, please don't go to a national marketing company to get real estate information. Don't go to a national space rocket something or other, who's what's it with a cool app to get the information that you need to make a really good decision at the local level. So work with a local expert. Realtors, we have a huge amount of resources, and we know who to call to get the job done. And be honest with your realtor too, going to the points made prior. So work with a local expert, contact a realtor and interview them, see which one, is going to be a good fit for personality and availability and experience in that particular market where you are looking to purchase or sell or both.
Awesome. Love it. Dana?
Hi, Dana Mainenti, Guaranteed Rate Affinity. My tip is that we do mortgages and we don't do magic. So if you need to wait and work on some things, work on credit or income or assets or, anything like that, I know that everybody gets excited if a realtor has a new lead. Oh my gosh, get these people pre-approved, but they're just not there yet. Or this person, oh my gosh, I just got a raise, or my credit score just went up 5 points. I'm ready now. Well, you might not actually be. So just keep in mind that we do mortgages and we don't do magic. And we will work with you, keep you in the pipeline, keep in touch with you. And when you're, you know, we like, I think it was Alannah who said we have a fiduciary responsibility. We want to put you in a home and we want you to stay there. We don't want you to have any financial issues going down the road. So trust us, we're going to position you the right way. And when the time is right, we will get you there.
Awesome. I love that. And I think that to that point, when you're using some of those bigger lenders that are, you know, online or whatever it might be, sometimes they can promise you the moon and the sun and they can't make it happen. So having local professionals who you can hold accountable is very important. Because if you're dealing with someone who is in Joe Schmo, Idaho, I don't know, like you can't go walk into their office and be like, I need answers. You can't. So use locally. Know the people on here every week, they're the ones taking time out of their busy day. Real estate's crazy right now. Real estate is on fire. And I appreciate you guys for being here because it is so important, the information that we are sharing with you guys. It is so important for you guys to understand and we want to help you get there. So make sure you trust your local professionals and reach out to us. And my top tip of the week is going to be responsive. Answer your phone. If you're a buyer, answer your phone, read your email, and take the information, process it, and if you don't understand it, ask questions. That's my #1 top tip of like every year, all day.
You're here.
Cheers.
Can I add something to that?
Because I can't tell you how many times as a title company, you know, we're trying to get information from buyers sometimes or sellers and they're not answering the phone. And we're like, how are we supposed to move forward if we can't get a hold of you? So just be responsive, pay attention and read your email.
Right. Can I add to that?
Yeah, sure.
Time is of the essence. Any inaction is considered to be acceptance. So just keep that in mind.
Exactly. I love it. So with that being said, that's our Thursday's top tips in real estate. Does anybody have any major announcements they need to make? America?
Have a happy and safe 4th of July, everybody.
Yes, everybody have an amazing 4th of July. Stay safe. Enjoy whatever fireworks you may see.
All night long.
Not on the beach, but.
At our office today and tomorrow, 12 to 4 p.m.
Oh, Katey Bourgeois is giving out flags.
Palm City, at the corner of and negotiation in Palm City, Martin Downs Boulevard and Map Road.
The show and open houses to do, and my pipeline is overflowing.
Awesome. Awesome. Well, you guys have an amazing rest of your week. Thank you all for watching. We will be back next Thursday at 2 p.m. So make sure to stay tuned on the Arrow Title Services page. And if you guys are just tuning in now, you guys can watch the replay on our YouTube channel, Arrow Title Services. So check it out, subscribe, and we'll see you next week.
Thanks, Lucy.
Bye.
Bye.
Have a great weekend.